Hello there, this is Mike Foster with Coldwell Banker Commercial, and I'd like to invite you to the 2019 Commercial Market Report for Mesa County. So I always start off with our economic base. There's the Denver Aurora market as a benchmark, and this is the Mesa County employment trends. You can see that we've been up substantially, 2016, 2017, 2018. I've got a 2019 number in there that's could be seasonally adjusted. So you can see a nice ramp up in employment from 68,000 in 2016 to 72,000 in 2018. So we're definitely moving in the right direction. Population change, also a nice trend, 2015, 16, 17, and 18 in migration, averaging about 1,200 persons a year. These are our primary counties that we're getting them our population from. You got Garfield County there's our largest contributor, Delta and Montrose. So those are those neighboring counties that are receiving their own population growth and then spilling into Mesa County in the Grand Valley. And then the list goes to the Front Range and then out of state areas. Next list, this is another thing that really emphasizes what's happening in terms of employment trends. This is a LinkedIn survey of employees relocating from the Denver metro area and their top destination markets. And you can see that Grand Junction is the biggest destination between Denver and Vegas. We're ahead of Salt Lake, ahead of Arizona in terms of population or actual employment per 10,000 LinkedIn members. So that circle there that you can see in Western Colorado, it represents 5,000 jobs in 2018, so pretty big impact. This kind of gives you an idea of the LinkedIn members to population ratio. So what that really represents, that prior slide, is those employees are spread over a 4-county area. And what kind of jobs those are, this gives you a little bit of an economic snapshot of our employment trends in the technology sector. Millikan Institute did I think 350 best cities in terms of small market cities in 2018, and wanted to give an idea of kind of where Grand Junction is lining up on that chart. So what you have here is the top 10 markets in terms of the Millikan Institute, and if you look at there's a couple of columns there. One is recent employment growth, and the other is that we're ranked 28th in terms of GDP growth. When you look at the recent trends, it really pushes us from 131st out of 300. If we're looking at 16 and 17 trends, especially in employment growth and tech GDP growth, that puts us right in amongst the top 5 and 6 communities in the nation. And then I also put in Bend, Oregon and St. George, and you'll notice the positive attributes for those communities were university system and being a medical center. And we have actually both of those attributes in the Grand Valley. So these are some of our tech companies and their employment counts and their square footage occupied, all of which are growing quickly, especially when you look at FHE on that list. They just built a 70,000 square foot building. CART is getting ready to, fourth on that list, is getting ready to build a 40,000 square foot office building. ProStar is the only publicly traded tech company on the Western Slope, headquartered in Grand Junction. So that's an exciting development. So how does this translate to our commercial real estate? Big change in our built commercial square footage. We had a pretty, if you look at the blue bars, is total square footage constructed in the market. And then I have that segment in between warehouse and manufacturing, shop and yard, and retail and other, and then office. And you can see under the retail and other category, a pretty big construction trend, 300,000 square feet of construction. And I wanted to break that down for you. You can see a big part of that is actually self-storage. We had 5 self-storage projects get built last year. And what that is that's an indicator of the growth of our residential construction market, and our residential market in general has been on the uptrend now for 3 years. And it's reflecting itself both in our contractor trade space of our market is definitely, that segment has gotten up a lot of space, as well as storage. So you can also see a pretty big representation. We've got a number of hotel projects under construction, and we continue to have a decent amount of small standalone retail. Also, now we're diving into our vacancy rates. Definitely making some progress in this market in terms of vacancy. Every segment saw market improvement over 2017. So we're running at 6.3% vacancy in the office segment, 5.36% in the shop and yard segment, retail at 5.5%, and warehouse and manufacturing near 5.5%. So it's time to start building some space here in the valley. This is our triple net rates, also on the upswing. Office, I went ahead and converted into an equivalent triple net rate, but you can see the upswing on those segments as well in terms of our leasing environment. This is represents our 2018 commercial sales. We had 54 million last year in industrial building sales, and then that was closely followed by retail transactions for retail land segments, pretty large. That's the segment in yellow. And the land market is definitely moving quite rapidly at this point. We're seeing a lot of land transactions, and so that's going to be followed by quite a bit more commercial construction. You know, office and medical office also representing a pretty good transaction amount. So these are our headwinds. We're still dealing with some commodity cycle impacts from the natural gas price continues to be in the trough, but I'm expecting that to change as we get more and more liquefied natural gas projects constructed across the nation and start moving some of the gas that we're producing on the western slope out of the country. A little bit of regulatory impact from the recent oil and gas legislation, and we do have our tertiary market status, but that is starting to become more of an asset than a liability as some of the major markets get overcrowded and overinvested. As for tailwinds, we've got steady immigration, strong rec and tourism segment, rising tech GDP, and higher education. CMU continues to expand, moving towards its 20,000 student objective. I think they're running at 12,000. Fourth fastest growing university in the nation at this time. So definitely seeing a lot of activity on all those fronts. Here's a few of our single family residential trends in general. You can see our average price is moving up. Our inventory is dropping. Sold listings are definitely increasing. This is the Grand Valley. That was a statewide slide, and in the Grand Valley you can see a steady increase as well as a reduced inventory and pretty good sized uptick in sold listings. You can also see our permit activities up, and we're definitely not overbuilt at this point. We're just making good progress in increasing our amount of residential construction, but relative to 2006, we're still, the market's still very much under control on the inventory side. So that concludes the 2019 commercial market report for Mesa County. If you'd like more information on this report or a better look at the market, please refer to our website, cbcwest.com. or you're welcome to call me at 970-433-8374.